Welcome to the Operator Signal. Today I'm joined by Mark Crumblish. He is co-founder and CEO of Eagle Venture Studio, as well as Profit Inc. Mark, thank you for joining us today. Tell us a little bit about yourself and tell us about the companies.
I've been in and out of industry, and then been between those stints, kind of a serial entrepreneur. And 5 years ago, my partner Wade Myers and I started a couple of companies, including Profit Inc. And we realized that we had a really good reusable process for early stage startups. So we created a venture studio, which focuses on doing that. So for those who don't know what a venture studio is, it's a combination of a venture fund, incubator, accelerator, operator, and manager. And we do a few things as opposed to investing in a lot of things like a venture fund does. We focus on a few things, do them well, stay with them longer, and generate very high internal rates of return. In our case, our IRR is over 100% a year, which is pretty good. And we're very proud of that. Profit Inc. is one of those companies. Profit Inc. is a financial analytics company, and it's essentially migrating into a pocket CFO app that allows any small business owner to stay on top of their finances on a day-to-day basis in a really fun, interactive way that gets away from the boring vernacular of accounting and QuickBooks and suffering through reports. So we're having a lot of fun with that. The portfolio is currently 9 companies. 2 of them are venture studios that we have co-founded. We have one in Singapore, another one in Dallas. And the entire portfolio of companies and holdings is now 18 companies. We're having a lot of fun with it. We're also about to do we're doing raises in 3 of those companies right now. One of them is in AI. One of them uses AI to thwart human trafficking, and another is directly into the studio. So we're seeing a lot of interest and activity in today's market. I know that's what we're going to talk about next, right, James?
Yes, indeed. And just a quick note on venture studios. I've heard some of those really high returns, which is awesome. And you also have it, as we can tell, you've got a lot of breadth, and I can tell too, you've got a lot of depth in these companies. So I know you've got a lot of insights to share. So let's get right into it. What are you seeing in the current operating environment? Is there growth or tightening?
I think it depends on the space. I think there's a fair amount of revenue growth going on, some just due to price inflation. Um, Particularly in manufactured products, things of that nature, anything that is dependent on transportation, just they're reacting to the stuff going on in the Gulf and oil prices going up. But I think that they will eventually reset. Here in the Texas market in particular, we're just seeing a lot of growth. I mean, there's just a huge influx of population going on. There's road building everywhere. Whenever you have an influx of people need services, people need products, need homes built. And we're seeing all of that just tends to be a rising tide. There are some areas of margin contraction as a result of that. So the revenue is going up, but margins are not necessarily following, simply because the operating costs and sometimes the gross margins are being pressured a little bit. But I think over time that will level out, as it always does.
Yep. Are there any particular industries where you're finding growth right now?
Well, anything that is a smart application of AI is just getting a huge amount of attention. I'm not necessarily agreeing that they all should get attention, but there's huge amounts of capital being thrown at AI startups, particularly out in Silicon Valley. There's been a lot of money invested in infrastructure, server farms, cooling, everything related to supporting AI is getting a huge amount of attention. I personally think that the capital that's been invested there is overinvested. That no one is going to ever be able to make up the amount of money that has been spent there anticipating the growth. And my personal opinion is that large language model businesses, is essentially the large language model approach, is really not sustainable. It does not it does not have enough electricity available to support it. There's not enough water available to cool the data centers, and there's going to have to be some changes.
Yeah.
efficiency gains, alternative technologies that don't use so much compute
Yep.
and so much energy are eventually going to either support LLMs and make them more efficient, or they're going to disrupt them. But that's going to take a while. Uh, Another note on that is there's a lot of businesses that claim to be AI, but really what they're doing is they're just building on top of an LLM model. And I think that what's likely to happen is that the big guys start to consolidate. What they'll do is they'll just offer those services for free, and a lot of those companies will be unfortunately driven out of business.
Hmm.
Those shakeups are inevitable in any market. So right now, it's just a big scramble to
Yeah.
see who can get to a revenue model that makes sense and manage their costs at the same time.
Interesting points, and yeah, I can see that happening sometime, maybe in the not too distant future. So, where are you seeing pressure in the business right now? Is it margins? Is it supply chain, labor, pricing? What are you seeing?
Yeah, I think we're not doing a ton of manufacturing, but I talk to a lot of people in the manufacturing space, and most of the pressure and uncertainty is in supply chain. There was uncertainty related to the tariffs, China's reaction. They supply a lot of things that U.S. manufacturers are dependent upon. Then you have the transportation cost being disrupted. So there's a lot of uncertainty going on there, and it's very difficult, particularly for people in the construction industry, to forecast what their material costs are going to be. How they're essentially doing their bidding on long-term jobs is probably going to have to change. There's going to have to be contingency clauses in their contracts, to accommodate rapid price changes going on in the market. So I see that on the material side. On the labor side, we have a different problem. Is there's a lot of really talented people coming out of undergraduate programs, even graduate programs, looking for jobs, and people are hesitant to hire them. And they're hesitant because they're asking, well, can I get what I would from a new hire just by using AI? Now, we're doing some experimentation with that. I think to some degree that's true, but you still need, in my opinion, a good human in the loop making decisions. You don't want large language model programs making important decisions for you because they're stochastic. They're not deterministic, and they are prone to a lot of hallucinations. And if you challenge AI on something that you'll say, "Well, that doesn't seem right. What do you tell them?" It's like, "Oh, well, my bad.
Yeah.
you're you're right in the first place." But that's not solving the new graduate problem. I'll
Yeah.
give you an example. Is when I went through my MBA program, I went to Kellogg way back in the mid '90s when men were made of steel and ships were made of wood, as they say. Um, all the internships were paid and
Yeah.
handsomely paid, very, very handsomely paid. Today, most of the internships we've had here at Eagle Venture Studio, we've had some amazingly talented interns who came in and they just worked pro bono just to learn, and that's a very big change that I've seen in the market. Now we've hired a number of those people uh, downstream, so it does make sense to do that. But there's a lot of competition right now on the sell side for intellectual capital, where there's a lot of demand. Anybody who is really good with AI and can walk in and say, not only can I think strategically, but I'm also highly skilled with AI tools, they're probably differentiating themselves in the
Interesting.
marketplace. Generally, intellectual labor, it's a buyer's market, not a seller's market.
Hmm. Interesting. And so, where are you still finding growth opportunities? Is that with talent, or maybe capital investment, acquisitions, new markets, or where are you finding growth?
There's particularly in Dallas Fort Worth, there's a ton of inefficiently used capital. I think we're on the Fort Worth side of the Metroplex, so there's a lot of oil and gas legacy here, and multi-generational families have invested, and they know this market really really well. But I think uh, disruption in the oil gas market, it generally causes problems. Once oil gets above 120 $125 a barrel, or it gets down below 55 or 60, a lot of people go broke, on both sides of it. That happy medium in the middle where supply and demand are kind of optimized is where the sweet spot is I think with those kinds of things being amplified right now, and all the influx of finance people moving from New York to Texas. I know I just saw on a commercial this morning that the Texas Stock Exchange was kind of bragging that um, the big finance companies like JP Morgan now have more employees in Southlake than they
Yeah.
do in New York. And I think that's an early indicator of what's going to happen is Texas has the opportunity to really become a commerce hub. I think Dallas Fort Worth could be the next Silicon Valley. We're lacking a couple of things for that to happen, mostly like grassroots stuff happening, but there's
Yeah.
lots of people like you, James, who are bringing the communities of interest together, so that they're not islands anymore.
Yeah.
As we're
Yeah.
bringing this together. So I think what's going to happen is capital is going to start diversifying and recognize that we do have an amazing amount of talent, infrastructure, universities, support services here in the DFW corridor that could make this the next big economic and particularly tech hub in the United States, if
Mhm.
not the world. Eagle Venture Studio is actually trying to be out front of that. We're doing a lot of education, not just of students, but communities of interest, private equity groups, and uh, other family offices here in the Metroplex. We're trying to take the mystery out of early stage investing because we have a model that works really well. And it's not a venture model. It's not a venture capital model where you just take in money and you spread it across 25 investments in a portfolio, knowing that because of the power law, one or two of those is going to return the fund. We do a tremendous amount of diligence and we launch our own ideas. Eagle Venture Studio primarily launches our own ideas, and we're extremely disciplined. Both my partner and I are ex-military people. He was a Ranger, I was a naval aviator, and we bring that discipline to our process. And because of that, we kill off a lot of ideas early before we spend any money, and we do a pretty good job of getting great returns for our investors because we're really investing alongside them and we're operating a few things and making sure that they don't make the common mistakes.
Mhm.
That kind of model is much more aligned with how somebody invests in something like oil and gas. There's science to it, right? There's geology, there's fracking technology. They know that business really well, but it's hard to get predictable returns when you put all your eggs in one basket in one industry, and it's so easily disrupted by things like a conflict
Yeah.
in the Strait of Hormuz getting choked off. So I think
Mhm.
there's a lot of opportunity now between that, and there's a great Texas story emerging between all the people coming to Texas, all the talent coming to Texas, the capital that we have here, and now the fact that we have the Texas Stock Exchange moving. And what we have one of the largest economies in the world just in the state of Texas with the 30 million people that we have here. So if I sound excited about it, I am.
Yeah. I am as well. I want to echo all of those sentiments too. So, all right, over the next 12 to 24 months, what forces are shaping your decisions?
I would put them, the two biggest ones are very, very easy. One is the liquidity crunch in venture, and the second is AI. Those are the two biggest things. I'll talk about the liquidity crunch first
Yeah.
is, um, you know, p- the reason that people have to be accredited investors to invest in startups or venture funds is because the return horizon is unpredictable and the investments you make are illiquid. You're putting it into a fund. You're not sure if you're going to get the money back, let alone when. Back in the .com days, you were looking at somewhere between 3 and 7 years was the return horizon when you could expect to get your money back. Well, due to a bunch of different things, regulation, uncertainty, a lot of capital flooding the marketplace, competition for new ideas, there's been a lot of change in the last 15 years. And now the liquidity horizon has stretched out. It it could be 3 years, it could be 10, it could be 15.
Yeah.
And that is a long time to wait for an investor, especially if you're a baby boomer. If you're a baby boomer, you don't know if tomorrow is scheduled 15 years from now, right? So you're kind of looking at that and going, well, do I want to put my money in venture or do I want to put it somewhere else? That issue of liquidity is what a lot of angel investors and venture funds are trying to solve for. In
Yep.
my opinion, the answer is the venture studio. This is one reason why we created it. Is now dovetail that with what AI is doing. AI is changing everything, and I think th- people who are thinking about it effectively are only maybe 5% of the population, the business population. And what do I mean by that? Is an ineffective way to think about AI is to say, well, I've got this business and I've got these processes. Let me use AI to make them incrementally more efficient. Now, that's necessary.
Sure.
Everybody needs to do that, but that's not sufficient. If you
Yeah.
do that well, you'll probably survive,
Yeah.
but you're not going to be at the top of the market.
Mm.
I think the way to think about AI effectively is to ask a couple of questions. Is say, number one, dispense with the way I do business. Just pretend it doesn't exist and ask if I can envision what AI will enable in the next 2 to 3 to 5 years. What if that system existed today and was perfected, what would my business processes look like? What kind of talent would I need? How would I recruit? How would I do business? What would my culture need to be? And you kind of look at that and think of it as a missile that you need to intercept, and you kind of have to lead turn it and intercept it at some point, say 2 years down the road,
Yeah.
and make those changes now. Those companies are going to do that. And I'll give you an example is when we launched our first two companies, Profit Inc. and Proforma, it took about 18 months to 2 years to go from the idea through the validation, through the creation of the company, testing, getting to product market fit, and building out the software to do that. With the exception of the product market fit, we do that now on a new idea in 2 weeks. 2 weeks, we do that using AI effectively because we've figured out how to use the tools and how to automate a tremendous amount of stuff. I wrote an MOU and a proposal yesterday for for two huge projects. Normally, those take a couple of weeks to put together. I did them in a couple of hours,
Yeah.
myself without having to use an admin or a staff. So that second point, that is an example of just incrementally doing better with a process. That won't make you win in the marketplace. The first one that I defined is asking, what can we do with AI that's totally different? And I can just forget about how I do business and say, well, if I'm a one-man shop, how am I going to do it? That's what's going to change everything. So you take those two things. What now we can do in a venture studio is instead of having to raise, say, $1.5 million or $2 million in a seed round, I can now raise 100 to 300K, and I can accomplish those same objectives with a fraction of the money, maybe a third to a quarter of the money, and even less a fraction of the time, like 1/4 of the time, and get to something that is sellable or even is an exit target in the market. And if I can deliver, if I can do an exit at $10 million for a $500,000 investment
Yeah.
in a year and a half, that creates very high liquidity and internal rates of return, and it's much better than investing $5 million and then exiting at 50 5 or 6 years from now.
Yeah. Yeah.
Those are the things that are shaping us the most, and it's hard, but we're really having fun
Yeah.
changing things up and adapting.
Yeah. Yeah. I always I always love hearing about your insights and your experience. Last question. We got a couple minutes here, and what do you think in a like a quick prediction, if you will? What do you think is coming next for operators here in DFW?
Oh, yeah, what a great question. I think in any of these things, despite everything that goes on technologically, with capital and everything else, you have to remember that um, gross domestic product, whether it's measured at the nation level or the local level, is a function of two things: demographics and productivity per unit demographic. So it's just people times output. And we have a great advantage here in DFW in particular, in that there's such an influx of people coming in here, the working demographic. And by and large, it's an educated demographic. So that
Yeah.
changes productivity. Now, if you layer in the massive productivity opportunity that AI delivers, plus the capital that we have, that this is, I think that it is almost like a monetary policy formula, is that you got people, you got educated um, populace with productivity and capital. This place is poised to just absolutely explode. I think the winners are going to be those who invest in AI effectively, and they invest in capacity in advance of the wave. So
Yeah.
if you've got a manufacturing business, if you're in construction, if you're in anything that really needs to respond to the influx of population, my guess is that those who get out in front of that and get to some level of efficiency before everybody else they're gonna get their first strength, their operating costs, improve their bottom line, and they're gonna win in the
Yeah.
marketplace. So
Yeah.
that's it. Don't forget about the demographics. Technology matters, but there's no substitute for people times their output.
Yeah. Yeah. I love it. Mark, it's like I said, it's always great hearing from you. And you spoke at one of my summits earlier this year, and that was awesome as well. But I thank you for spending some time with us today, the insights, the experience. Those of you watching, I hope you find this as useful as I do. To find more episodes of the Operator Signal, you can connect on YouTube here or follow me on LinkedIn. Mark Crumblish, thank you for joining us, sir.
Thanks, James. Thanks for having me. Appreciate it.